Welcome back to Investing with Confidence. I am your host, Joshua David, talking about the do's and the don'ts in the financial markets. We're going to get into more topics like stocks, options, futures, Forex, different comparisons in them. But you know what? We had this workshop that we had a lot of calls on and text messages here just recently, right here in Bloomington. We're doing a workshop here, and it's a hands-on on how to use the proprietary platform that Online Trading Academy has called Click, and making smarter investing decisions, what that actually looks like, but also get into how to manage risk and navigate these volatile markets. Call 952-814-4410 for Wednesday the 13th or Saturday the 16th. You can also text the word invest to the number 484848. We're going to get a call right back and get you set up for that class. But you know what? We're going to give you a financial quick start kit just for getting started. So, Al, you want to talk about some, different comparisons with stock and options, because stocks are very expensive right now, all-time
Right.
highs. Even though we've dropped a little bit, they still are very expensive, and a lot of investors don't feel like they can get into the market because of that. So there's some different techniques and strategies that the Wall Street elites are doing, but these techniques and strategies, they're just normal. Everybody can do them because they're available to us.
Right.
Talk about those different comparisons and let's do some stock analysis even.
Yeah. Well, first of all, it's important for people to remember that there's really two components to your financial life. There's the accumulation phase. For those of you that are still working, that's the kind of the income phase. And then at some point in time, you go into the distribution phase, that retirement phase. And there's different ways of approaching both of those parts of your financial life. One is to look at the long-term component of it. And unfortunately, most people that are in the market are put into that long-term component by their financial advisor, even though you may have short-term needs right now. If your goals are to generate some additional cash now, that long-term portfolio is not the right place to be. Long-term stocks are by far the best investment that you can make. Just to kind of give you an example, compared to mutual funds, most of you are put in mutual funds, which might give you somewhere between 3 to 5% returns over, if you look at the average returns over.
Oh, yawn.
Yeah, exactly. But let's look at what would have happened if an investor had just looked at some individual stocks. And I'm not saying that all of our students did this. This is just to do kind of a comparison. A lot of people have heard of Amazon, and Amazon's trading at over $3,000 a share, about $3,300 a share.
Actually, 32.88. It was where it ended the week.
Okay, so and that's a lot of money. A lot of people just cannot invest in Amazon because of that. I mean, one share is over $3,000. So if you go back to December of 2018, it was trading at just a little over $1,000 a share. So that's a triple in that time period with that one stock. Apple, most people are familiar with Apple. Well, Apple's trading around $144 a share. Back in 2018, it was $35 a share. Companies like Tesla, most people are familiar with Tesla.
Yep, $785.
Yeah, $785, $786 right now. Back in June of 2019, it was $35 a share. So obviously, no one's going to hit all of these, but just to kind of show you the difference between being selective in what you do and then just putting your money into a mutual fund. So that's the long-term portion or component of your investing. What about short-term? What if you need to access cash short-term? There are assets that the big players, the smart money, we call the elephants, Wall Street firms, people like Warren Buffett, hedge fund managers, they're using they're short-term, but also have leverage, which means that you can have a smaller amount of money controlling a much larger investment. So let's look at Amazon, for example. Amazon very often has moves during one day that could be anywhere from maybe $20 to close to $100 a share, both directions. And that's a big move. Those are the kinds of things that the institutions are taking advantage of. If Amazon was up $55 a share, that'd be about 1.69% return on a $326,000 investment.
Yeah.
And an option could have been purchased that would have been up 139%, would have cost under $20 a share.
So that's the difference between stocks and options, is you're taking a smaller amount of capital to do the same exact thing. And they're
Correct.
They're used in contracts, right? So you buy a options contract, which is controlling a certain amount of shares. So in this example that Al is talking about with 100 shares, which is one contract.
Correct. Yeah, and options are a derivative, so their value is derived from an underlying, which could be a stock, it could be a futures contract, foreign exchange contract. But options can be used short term, they can be used long term. In fact, for that stock portfolio, for your wealth bucket, you can use options to boost the returns, but also to protect your assets.
Yeah.
And that's a huge component of being successful, regardless of whether you're doing the short term component of your financial life or the long term component. You have to protect what you have. No one is going to be right all the time. In fact, the market will not allow risk free investments. There is no such thing as a risk free investment, but there is a way to manage risk, to control it. The big institutions are doing it. Wall Street investors like Warren Buffett are doing it. Our students are doing it, and that's the number one thing we teach is risk management. Options can be used for that, very much like an insurance policy, and then also allow you to participate in a higher priced stock with a small upfront investment with a much greater potential return. Probably if the underlying is up 10%, rule of thumb, the option is going to be up over 100%.
Yeah, so it's just difference in using the right asset class based on the capital that you're going to be using. And just going back to this Amazon example you're talking about, we mentioned supply and demand zones earlier. Basically, supply means there's more sellers than buyers, and demand means there's more buyers and sellers. And in the strategy that Online Trading Academy teaches, they talk about zones. So, for instance, Amazon has two potential zones there. I mean, Amazon has a potential supply zone, an area where buyers could be sitting right around 3,600.
Actually, the supply zone would be where the sellers are sitting.
Yeah, sellers. I mixed that up a little bit. But then there's also a potential buy demand zone,
Right.
An area right around 1900. So there's these areas where potential buyers and sellers could be, but is using the right asset and planning for that. It's not just taking and buying Amazon right now. It's making decisions on when to wait for price to come to where you are interested, whether you want to buy it or sell it. And in these workshops, Al gets into these comparisons and kind of shows about what's happening with the difference between stocks versus options. So that way, the market, anybody can get into it because it's available to everybody, but you have to have the right asset based on the capital that you're going to be using. So it's all about being more capital efficient. So I know you talk about that in these workshops. So I want to give away some passes to this workshop that we're doing here Wednesday, the 13th. And Saturday, the 16th, it's a hands-on. So you're actually going to use our proprietary platform. It's called Click, and it shows you how to make smarter investing decisions. It guides you through your process. Call 952-814-4410 or text the word INVEST to the number 484848. When you do that, you're going to get a text back. Click the link, pick your date, but you're also going to get a financial quick start kit just for registering. Now, Al, you talked a little bit about stocks and options, but you mentioned mutual funds, right?
Mm-hmm.
There's mutual funds, but there's also an alternative to mutual funds. Talk a little bit about that.
Yeah, there are it's somewhat similar to a mutual fund in that it's a basket of stocks that refer to an index or a sector or in particular part of the financial world. It's called an exchange traded fund, or ETF for short. They're very similar in the fact that you have good diversification within that particular identified area, whether it's technology or whether it's the Dow or the S&P 500, the NASDAQ, whether it's financials, whether it's energy. There's an exchange traded fund that mimics virtually every component of the industry. There are thousands of them out there. The great thing about them is that the cost of being in them compared to a mutual fund is significantly lower. Mutual funds typically have a 3 to 5% overall cost when you look at all of the kind of the hidden fees that are in there. With exchange traded funds, for example, the Vanguard S&P 500 ETF has an expense ratio of 0.03%. Virtually non-existent.
That's a big difference.
Yeah,
for mutual funds.
And the other thing is with mutual funds, how do you protect your mutual funds? What if the market rolls over? What if we go through a correction or a bear market? What will happen to your mutual fund? I'll tell you, it's going to go down in value because you can't protect it. You can't have a stop loss on a mutual fund. You can't short a mutual fund. Mutual fund managers can't short their assets. With ETFs, you can have a stop loss. You can have that protection. You can use options on an ETF. So instead of buying the full exchange-traded fund, you can have an option that's a fraction of the cost of it. But having that protection is huge being able to trade in and out of it when you want to. It trades like a stock, so you can get into and out of it during the day. You can't do that with a mutual fund. There's a number of benefits that exchange traded funds have over mutual funds. We talk about these in these classes, and in fact, our students when they start going through the education process here, that's probably what we're going to have them trading would be exchange traded funds and some individual stocks.
Yeah. So, for instance, Al was talking about the S&P 500. The S&P 500 right now is roughly at 43.91 is where it closed at for the week. Well, the S&P 500 has that SPY ETF, as Al's talking about, which is traded only at 437. So it's a lower barrier of entry.
Yeah, people might have heard that referred to as the spider.
Yep. There's also an ETF for oil. So if people want to get into oil, but they don't understand the futures market, which we'll talk about next,
Right.
there's a ETF for that. It's USO. There's an ETF for energy, and I know you're going to talk a little bit about that coming up as well. It's XLE.
Right.
So I mean, in these, especially energy, has been skyrocketing. I mean, it's sitting at $56 per share right now, but over the past, I guess since what's it look like here?
Well, since January,
about the last year or so, it's up from 30 or 27 roughly to 56. So there's opportunities there, whether you're buying it, selling it, but also doing options on that. So I'm taking a fraction of that cost. So if you want to learn more about, if you want to get hands-on in one of these workshops, we do these workshops here in Bloomington to get into how the platform executes these orders automatically for you, how options trades are made, how futures trades are made, which we'll talk about coming up next. But also we get into our step-by-step rules-based strategy for trading any assets in any market in these workshops coming up Wednesday the 13th or Saturday the 16th. So if you want to learn more about that, call in right now. Call 952-814-4410. That's 952-814-4410. Or you can text the word invest to the number 484848. When you do that, you're going to get a link back. Pick a date within that link. And then you also get a call just in case you missed that to get set up for one of these 2 days, the 13th or the 16th, basically next week for this workshop. Hands-on visual learning so you can see how trading actually works, especially if you're brand new. Brand new people love this workshop. So Al, coming up next, I want to continue this discussion about margin using leverage, talking a little bit more about the futures market coming up next. 952-814-4410. We'll be right back.